Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Desmos Capital Partners operates at the intersection of global capital and emerging market opportunity, working with institutional investors to navigate complexity where most people see risk before they see return. Now, that perspective matters right now. And joining me is Daniele Nyirandutiye, partner of emerging markets at Desmos Capital, based in Washington, D.C., where policy capital and geopolitics collide every single day. Daniele, it is so great to have you here, and I'm so glad that I got your last name right.
Lyndsay, it's so good to be with you this afternoon. Really excited for our conversation.
Absolutely. Now, I want to start with the big picture because the conversation around Africa still feels stuck in the past. So when you sit across the table from global allocators, what do you see as the real financing gap across African markets? And more importantly, why are institutional investors uniquely positioned to close it when traditional development capital clearly cannot?
Well, Lyndsay, the thing is, we are at an inflection point, what I like to say, an inflection point. And I think this has been a long time coming since I think the days of COVID-19. Right now, you have significant declines in development assistance, the traditional foreign aid assistance that was going to Africa. But you also continuously see that Africa is in a place where it's rapidly urbanizing. Population growth is on the rise. There's a growth in the middle class that is there. That all of these factors make Africa needs to have more infrastructure, more services. And that means that what exists now is not able to cater to the needs of today or the future. Currently, when you look at what the African Development Bank says, right, they estimate around $150 to $170 billion in annual needs for development for just Africa. And only $80 billion have been secured each year consistently. So you still have a $90 billion gap. So it's not the question actually for me when I say, when I see that financing gap, I see opportunity for investors, a discerning investor who's looking at the continent, not as a continent with high risk, but a continent with high returns.
Okay, so then that leads me to something I think gets glossed over here. Now, there is persistent assumption that Africa lacks capital discipline, when in reality, much of the issue is structure and access. So from your vantage point then, Daniele, where are institutional investors underestimating the sophistication already present in African financial systems?
So I think if you look at, different countries, obviously we cannot generalize because I think we have to look at each country separately, each sector and subsector separately. Because again, it's not lack of opportunities, it's how we realize those opportunities. Countries are willing, and they have been signaling time and time again that they are looking for investors to partner with. They're not looking for handouts. And I think as somebody who spent, nearly 20 years of my career as a diplomat, I've circled the continent, and the recurring theme has been, we want foreign direct investments. Yes, they are coming in. And in fact, I think just last year, we saw more than 75% increase in foreign direct investments in Africa. But the problem is that the distribution is uneven, right? Investors are only going to just a few countries on the continent. They're not looking at where other opportunities might lie. So for me, my message to investors is, don't stay on the surface. Let us help you go deep and take your money far, where you can take your money farther and gain more returns. Countries are willing to put their money where their mouth is.
Absolutely.
They're saying, we want to be co-investors with you. We want to anchor those investments so that we can mitigate the risk to actually show you that we are committed. So I think this is an important signal for investors to really take seriously and actually really come to the table.
Absolutely. Now, because there is still investors that are underestimating that sophistication, how does that misunderstanding distort capital flows?
Well, it does, in the sense that oftentimes what I hear is, well, Africa is risky, right? And I like to, to respond to this by saying, whose risk is it anyways? How are we identifying the risk? How are we quantifying that risk? Because the question is, the fact of the matter is, you can never mitigate, you can never eliminate risk completely. The only thing we can do is understand the risk, quantify it, and ensure that we are incorporating in our financial models. And I think for us at Desmos, that's what we do. That's what we like to call advisory with context, because we are trying to look at how are geopolitics shaping the flow of capital. What are the conditions on the ground telling us? Where are opportunities? And then how do you marry all of these things into a model that makes sense for the investor and the investee? And that, for me, that's really what it boils down to.
So if we build on that, then I want to talk about returns versus narratives. Now, many global investors, they still frame Africa, like you said, as either high growth or high risk. Now, rarely both at the same time. What are investors still getting fundamentally wrong about the African investment landscape, especially when it comes to pricing risk relative to long-term upside?
So I think it is true that sometimes the data is not readily available, and oftentimes investors rely on macro level data, and that macro level data is absolutely important. I think where I would like to really encourage investors, and what we try to do at Desmos, is to really take it down a notch. Go from the macro level, then take it to the project level. Yes. And then take it down to what that sector specifically and the subsector, so you can fully and truly appreciate the different elements that make up that opportunity. And then certainly, of course, there's going to be risk. And then look around and say, okay, what partners are available locally to me that are willing to co-invest with me, or at least to be in the driver's seat with me to ensure oversight. And again, that's where institutional investors like pension funds, African pension funds, continue to signal time and time again. Again, I was recently at the North Africa Pension Fund Summit last year, and the conversation was just that. These guys are sitting on $600 billion of resources. And they're saying, while we have been traditionally very conservative, we are looking for investors to co-invest with us on, some of these large-scale infrastructure development that we need, to co-invest in, healthcare services, on all these growth sectors that are ripe for transformation. So for me, it's take it down, break it down, so that you can fully appreciate the risk, quantify it, and then figure out how you mitigate it.
Well, that's great advice right there. I want to actually ground this in a real-time case study. Now, you said that there is $600 billion of resources still available, and yet one of Africa's, one of their areas, Ghana, has now just put a $2.8 billion ban on gold exports, and that's sent a lot of shockwaves through the market. So, Danielle, can you walk us through, from your point of view, what that decision actually signals? Is this about revenue capture? Is it about regulatory control, political pressure, or something actually maybe even deeper in terms of sovereign strategy?
Yeah, no, I think, the move that Ghana just made, of course, it can be very alarming. But I think we also have to take a step back. In the past, it was always, all of us on the outside, we are investing in Africa. And again, Africans are saying we want you to invest with Africa, right, as co-partners. And so this move, in some ways, it's one, while it may, the surface seems to be restricting, foreign investment, what it's really trying to do, it's trying to almost, it's trying to make sure that we move away from always exporting the raw materials, but also really taking a step back and saying what capacities do we have, or do we need to have locally to process some of this raw material? And then how can that help benefit communities around? around the country. And I've seen this kind of play out in other countries and other conversations I've been in. For example, Botswana recently, was talking about how, obviously, as a country that has benefited significantly from their from diamonds, they're now in a stage where they're beginning to say it's been great, but how do we make sure that these benefits are also benefiting the communities where these raw materials are found? And I think that's an important question that we need to be asking ourselves, to be thinking about, both as investors but also as countries when we're entering into these negotiating discussions. So I wouldn't say that it's a definitive no, don't come to Ghana. I think still come to Ghana, sit down with them, and talk through exactly how you as an investor can and will be able to help Ghana continue to develop beyond just the extraction of the raw material, but contributing to societal transformation.
Well, I mean, that's a fair statement right there. And I want to stay with Ghana just for a quick more moment. Investors tend to react emotionally to that policy, and moves like this, I mean, as you said, it can be very scary. So again, from your experience, what's the wrong conclusion right now investors are drawing from the gold export ban? And further to that, I mean, what should they actually be watching instead if they want to understand second order effects across mining, across FX stability, and regional capital markets?
Yeah, I mean, I think for me, the first thing I would say is, yes, what we read in the newspaper can be scary, but let's take a step back and look at the regulatory framework in Ghana. What is it doing and not doing, right? What are the underlying conditions and issues that may be the reason behind some of these moves? Because it's, again, nothing is done in isolation. No policy is ever developed in isolation. And I think that's a lesson I've learned over my many years working in these countries. So we need to really fully understand the context and understand where there might be openings to do things better. Oftentimes, a policy doesn't just come because people, in this instance for Ghana, doesn't want investors. They certainly do need investors. They want investors. But they also want investors on their own, not on their own terms, on terms that are beneficial to both parties.
That makes sense. Danielle, let's zoom out here across the continent as a whole. Policy risk is often cited as the biggest deterrent to investment. Yet capital continues to flow into certain African jurisdictions while others struggle. So what really separates markets that successfully attract long-term institutional capital from those that repeatedly scare it away, especially in mining and natural resources?
So I think that the most important thing here for me is, as I mentioned, Africa is in a place of rapid transformation across all growth sectors. What is needed is patient capital. And I think oftentimes investors want to, quick in and out. In and out is very tough, particularly when you're trying to build roads, hospitals, housing, and so on and so forth. That requires long-term capital. And so this is where I come back to my point about the role that institutional investors on the continent can play. The role that development finance institutions like the World Bank or the African Development Bank and other European banks can actually play here is to develop tools, blended financing tools that can allow to de-risk some of these investments so that our investors can come in feeling confident. It is also an opportunity for institutional investors in Africa, pension funds, insurance companies, who tend to be more focused on that long-term investment. They have the patient capital, can come in essentially to guarantee that first loss, so that as an investor, you can come in and say, you know what, these guys are already here, they're already committed. There's nothing that signals seriousness than a pension fund, a local pension fund in Africa saying, we are taking our people's money and we're putting it into this project because we believe in it. And so I think we need to see more of that. And I hope that as we move forward, we can continue to create more opportunities for investors to see and meet and have conversations and dialogue with these institutional investors, because they are looking for investors out there in the universe to come out and co-invest with.
Well, before I let you go, I do want to bring this back to the investors sitting at home or in the boardroom watching Africa from a distance. Now, you spoke a lot about some really great advice on, what is needed, what Africa is really saying, all the different things. But if there was one signal that tells you a jurisdiction is serious about partnering with global capital rather than simply just extracting from it, what is that signal, and why does it matter more than the headline risk?
Ooh, Lyndsay, that is a tough question. And I'm trying to find a one-liner that can fully summarize it.
That one catcher right there, the first thing that comes to your mind, what would you tell investors?
I would say go where no one else is going.
Oh, great. Why is that? Unpack that further for me.
Because when investors are looking at Africa, they only look at the big economies. Not all big economies, just a few. But Africa is a continent with 54 countries. So you have 54 chances multiplied by many sectors and subsectors.
This is true. Well, that's great advice. And I love that you just unpacked it enough for investors to go, okay, let's take another look at this for sure. Now, Danielle, this has been such a sharp and very, very necessary conversation. So thank you for joining us. Definitely come back and just unpack this a little bit further with us soon.
No, I would definitely love to come back, Lyndsay. Thank you so much for having me.
Again, I have been speaking with Daniele Nyirandutiye, partner for emerging markets at Desmos Capital Partners. Now, this is a private investment platform working across global emerging markets with no public ticker. Now, Desmos Capital Partners is not chasing the chaos. They're positioning capital where structural change meets long-term return. And that right there is where real opportunity lives. I'm Lyndsay Malchuk with Apaton Media, and this has been the Market Frontlines. We will see you next time.